Good afternoon everyone. Today we'll give a public analysis on the Forex market. Earlier today I made a video about the Forex market in Dutch, and this video will be the same but in English instead. During the first introduction video, which is the very first video of the Trias Traders YouTube channel, we explained all the currency pairs that are researched within this community. And in this public analysis I'll explain the analysis on a few currency pairs, just to give you guys a better insight of what's happening on the Forex market. Let's begin. The very first currency pair that I'll look at is the Australian dollar Swiss franc. On the daily time frame, we see that there is an uptrend present from the beginning of this year until now, and for which holds that the price tends to move in a range for the past 2 months. We'll go take a look at the range from a closer time or lower time frame, and we first look on the 4-hour time frame to further see how the range developed in the past 2 months. So if we look at the volume profiles, so the volume level per price level, we see that this part would be the value area, which is approximately the same as from the beginning of the range until 2/3 of the range. And at the end of the range we also see a high volume node. Also an interesting location to take into account, since that's where price tends to resist on a particular price level. Furthermore, if we look at the deviations that have existed in the range, aside from this small and quick deviation, we see 3 larger deviations, especially the latter. But if we compare the former two, we see that with the first deviation, price moved back into the range immediately to the, or almost immediately to the bearish order block. And for the second deviation, price did move back into the range, less convincingly, and it did not eventually go to the order block before reversing. If we look at the current deviation, it's the third one and it's way bigger than the previous two. And it also takes a longer time before eventually going back into the range. If I look at how the deviation develops right now, I'm not convinced yet to take a long trade at all. I want to see more confirmations, and one of the things that I would like to see on this time frame is for price to come back into the range and to bounce on the lower part of the range before going up on the lower time frame. If price does this accordingly, we can see one of the few things that may happen. So this fair value gap might get filled, especially since there is a volume imbalance on the 4-hour time frame. And also another thing is that price may move until the value area high and or to the point of control. If we look at the 2 previous local tops, we see that while the third one did move to the bearish order block, the last one did not do that at all. So it did move to the value area high, but after that it got reversed and it even dropped down under the range. So one of the things for a long to take into account for the take profit is to assume that the same thing may happen again, and to therefore look at a take profit which would be around the value area high. Obviously, if the lower time frame does support a longer uptrend, or the narrative for a longer uptrend, we can even take profits at the bearish order block. But as of now, I would rather look at the take profit area between the point of control and the value area high, and for an entry only if price indeed convincingly comes back into the range and bounces off the lower price levels of the range. The second currency pair that we'll look at today is a currency pair that involves the Swiss franc as well, but instead is the British pound Swiss franc. And if we first look at the daily time frame, we see that price tends to move in the downtrend from March last year until now. If we look at a more recent range that has been developed from March of this year until now, we see a range that has some similarities with the range that we saw before. if we look at this, we see that the last deviation is a lot bigger than the previous ones at the at under the range. And if we just look at it, it's technically not in the range anymore. But for the British pound Swiss franc, another useful thing that I'm looking at before eventually assuming that the price has been accepted back into the range is if price moved above these swing highs. So if price moved above these swing highs and even partially fills this fair value gap, then if price bounces off the lower part of the range, then I'm more convinced that price may be accepted back into the range and that this deviation was nothing more than a large liquidity grab. If that's the case as well, then if we look at the value area, we see that at these levels, this is where the value area high is. Let me just check where the point of control for this range is. Alright, value area high is still as it is. I believe we can take off the high volume node. I think the reason I marked it as such before is just because it's a cluster of volume, but it's way less than the value area, and it's not something that's important enough, I believe. Right, the point of control is here. The point of control, if we look for a possible long, is pretty much at the lower end of the range, so it's around the 0.25 level of the range. I am looking earlier for a specific take profit at the upper side of the range. If you can look at it and see that a specific resistance was there for 4 times already, and possibly there is even liquidity above this area simply because there are equal highs here. So one of the things that would be interesting in the near future is to check how price develops on the lower time frame, and if we see that price will be reversed again, such as this previous high, then of course it's better to simply go out of the trade and accept a small profit. If not, then price can move a bit more to the uptrend on the lower time frame and could possibly even have a liquidity grab around here. And if we even look at the weekly level, it might even bounce off the weekly level, and then at which the weekly would be a resistance. This is just speaking from as of right now. The first step would be for price to move above the swing high that I've mentioned earlier and be accepted back into the range and bounces off this particular weekly level. In that case I will look further, but this is more or less how I look at the British pound Swiss franc. The third currency pair that I'll look at is also the last one that's involved with the Swiss franc, and it's the Euro Swiss franc. Similarly to the British one, we see that the Euro Swiss franc is also operating on the lower time, or on a downtrend on the higher time frame, and it also started around March of last year until now. And if we look at the range that is more recently developed, we see that 2 weeks ago until now there is a specific price range that I'm looking at, and we'll see that within the range, this is the value area that I'm looking at. There are no interesting high volume nodes. Here we do see that at the upper side of the range there is slightly more volume than around the levels, but it's still not convincing enough to mark it as a high volume node, in my opinion. We see that the point of control is at the mid of the range, or it's slightly below that. And also if we look at the top of the range, or even above the top of the range, we see a bearish order block formed at the 8 hour, which is also just the part at where the swing high is developed before it went down into a range. Now we see that the fair value gap where the volume imbalance was has already been filled. And personally I was looking just for another move into the bearish order block for an ideal entry. So personally I tend to look at somewhere at the lower part of the bearish order block for an entry, and for a potential stop loss I am looking for a tight stop loss, simply because above this whole range there is a huge fair value gap, and even a part of that has a volume imbalance on the 4-hour time frame, and therefore I would like to have a stop loss at where I might get out quickly before price tends to move completely and fills a part of this fair value gap, or who knows, even the whole gap for that matter. So in other words, if price tends to move again into this order block, I will look for an entry, have a tight stop loss, and for a potential take profit I believe that the part around the point of control is a great one, and also even the part below this range, and it's in particular because there is a fair value gap that is present with an extreme volume imbalance as well. So not just a volume imbalance, but even an extreme one. And the last thing about it is that there might be even a possibility that liquidity is below this area, so below this swing low, and the combination of those two would be that there is a liquidity grab and even a gap yet to be filled with an extreme volume imbalance. So this is more or less how I look at the Euro Swiss franc for now. For the next currency pair I look at Euro Canadian dollar, so it's also a Euro currency pair that I'm paying attention to. And again, similarly, we see a huge downtrend that even started earlier. So it started in July of 2020, so 2 years ago. And the range that I'm looking at is in particular interesting on the 8-hour time frame. We see that price has formed equal lows at the lower part of the range. And personally, what I also explained in the Dutch group, the possible entry that I'm looking at is one that's above the or around the value area high. And the reason I'm not waiting again for the 8-hour is simply because if we look at the previous times that price reached the 8-hour upper range boundary, we see that price also moved away quite quickly from there. So that's why I don't think that price moves to the upper boundary before going lower. I do think that there is a possibility for price to move to the value area high. I'm not a fan of taking the entry way too late, which is why I simply will wait for the possibility, and if it doesn't come, then I'm alright with it as well. For the value area high, we see that there is a fair value gap at the 4-hour, but it already is largely filled. So as we can see, this was the original fair value gap, but price has been filled for the majority, and therefore there is a smaller probability that the rest of the price will be filled again before going lower. So in other words, the probability that the trade setup will even occur is not a great one, but yet it is something for which I have an alert for, and for which is something that I will pay attention to. So if the probability presents itself, I will be more than happy to take the trade. And if you're already in this trade, or if you do want to enter more aggressively, then the take profits that I'm looking at is one that's here, so the point of control, and even that would be even greater one, a potential liquidity grab that's below these equal lows. So what would be a possibility is to have a partial take profit around the point of control and even the rest under the equal lows. The next currency pair is also one involved with euro, and it's the last currency pair that I'll check that is associated with the euro, and this is the euro New Zealand dollar currency pair. If we look at the daily time frame, we see that from April until now there is an uptrend. And if we look at the range that has developed, we see that from 3 weeks ago until now that price tends to move within these range boundaries. We see this being the value area, this part being the point of control, and we see that price moves into the fair value gap, and at the upper part of the fair value gap there's a volume imbalance. So there's even a higher probability that price will fill the complete volume imbalance before doing anything else. At the upper part of the value area there's a fair value gap with an extreme volume imbalance, but it's on the 15-minute time frame. So it's more or less, given that the price would be around here, then it's also interesting to take this fair value gap into account as well. The last currency pair that we're looking at today is the British pound Australian dollar. And if we look at the currency pair, we see that from the beginning of this year until now there's a huge downtrend. And if we zoom in a bit more, we'll see a range being developed. And the range that I'm looking at is actually one that's between these two, so between this bearish order block and this bullish order block. And one of the things that we see right now is that the current deviation is a deviation that takes longer before going into the range compared to the other two, and it's not even in the range yet. So one of the things before going for a long is for price to move back into the range and to move even higher than this swing high, and after a pullback, when it's accepted back into the range, that is where I will go for a long, or at least I will look at a long. For now, price may even move to this fair value gap as well before eventually going back into the range. For now, I'm just patient and I'll just wait until this trade possibility will show itself. And given that price may turn back or pull back into this range after taking out this swing high, then I will look at some possible take profits within this bullish order block, and in particular at the lower part where the point of control is at as well. And for a stop loss, it would really depend on whether this fair value gap has already been visited or not, but it will probably be a pretty tight one, especially with the assumption that the liquidity grab has already been taken place. This is something that I cannot explain that well. We just have to see how price moves in the meantime before I already say where I want my stop loss to be. But this is more or less how I look at the British pound Australian dollar. This was the last currency pair that I'm looking at today for the public analysis. I hope you guys enjoyed the video and learned from it as well. Give it a like, subscribe, and turn on the notifications to get all the other analysis, both in English and in Dutch, and I will see you guys in the next video.